Hello everyone and welcome to today's morning report chart appraisals with me, Richard Perry, market analyst at Handset Markets on Wednesday the 19th of April. We've had a significant move on markets in the last 24 hours in the wake of this announcement, the surprise announcement from the UK Prime Minister Theresa May that she would be looking to call a general election. Early general election on the 8th of June. There was a significant bounce on sterling, big move on reaction on forex markets, and we've had a significant selling pressure coming through equities as well. Let me show you the reaction that we've seen on the dollar. Basically the dollar got sold off against sterling. Subsequently, the knock-on effect throughout the forex majors meant that the dollar came under significant selling pressure yesterday. Treasury yields were lower, with the 10-year sort of lowest since November, and also seen on 2-year coming back towards that key support around 113.60. Interesting that we haven't yet broken back below that 99.20 area of old key support. It still hasn't been done on a closing basis really on the dollar index yet, but sort of moving back towards that way. Now there has been a little rally overnight as the treasury yields have rebounded, and that's been seen across the forex majors, with the dollar outperforming across the board. Dollar yen is higher by about 0.5%, and the Aussie dollar is lower by around about 0.5% as well. So they're the two big performing forex majors, but certainly very interesting moves that we're seeing on these markets. Now, another interesting market to show you is the VIX, which is sort of starting to fall back as these equities are starting to regain a bit of poise today, and it'll be interesting to see if that continues. Now, what have we got to look forward to today? Well, we've got the Eurozone CPI inflation data. That is at 10 o'clock. That's the final inflation reading for last month of March. Expected to come in at 1.5% and 0.7% for the core. 1.5 is basically the flash reading that we saw a couple of weeks ago, as was the core reading of 0.7. So that is at 10 o'clock. So no real expectation of any changes there. The weekly oil crude inventories at 3:30 is expected to show a drawdown, which on the crude stocks of 1.5 million barrels, that would help to stabilise a little bit of a selling pressure that's coming through the oil price, but that has just stabilised a little bit today. Basically, oil is flat on the day. Now, my chart of the day is the dollar Swissy. Now, what we have seen is dollar Swissy falling sharply yesterday as the dollar came under pressure. That completed this small head and shoulders top pattern. It doesn't look all that much on the daily chart, but on the hourly chart you can see it in much better definition. You can see a head and shoulders top going through there, and this sort of continues this sort of selling pressure through this downtrend that has taken us back below parity. Now, parity had been holding up as a basis of support the last sort of two or so weeks. Broke decisively yesterday, and that took us to 99.50, which between 99.50 and parity had been a pivot for a while, actually, basically for pretty much a year. An important pivot area, consistently been a turning point on dollar Swissy. Held yesterday that 99.50 level of support, but will it come under further pressure? Because you look at these momentum indicators, stochastics sharply turning corrective, MACD lines crossing bearish, RSI below 50. This all sort of confirms this breakdown that we've had on the near-term chart, and certainly suggests with this hourly chart forming this top pattern with the bearish or negative configuration, this little mini rally that we've seen today is going to be a chance to sell, I think, because look at that RSI over the last sort of week or so, couple of weeks, has been increasingly sold off around 60. And the MACD lines sold off around neutral levels. So I think this little unwinding rally is a chance to sell, because you've got that neckline around parity, and I think that would be a sort of selling opportunity. So that gives you around about 100 basis points of downside, 1.0107 down towards that sort of neckline around that sort of parity area, just above parity. Gives you around about 100 ticks of downside, so that's what 99 figure. So that could be where we start to see the market moving back towards in due course. So looking to sell strength on the dollar Swissy today. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.